S&P trying to go positive here. 59.11 would be a small advance if we could hold this level. Shane Skinner joined us, manager of trader services at Charles Schwab on the options beat today. Shane, good to see you back, sir. What do you think about this flat line for S&Ps today? A small little victory for bulls or a draw?
I call it a draw. I'm a little uneasy about which way this thing's headed.
Yeah.
We'll get into that here momentarily, but I would say right now I think this is still uncertain. And I almost wonder too if the unprecedented holiday tomorrow, or I shouldn't say holiday, but day off, due to the passing of President Carter, has anything to do with the sort of flatness of today, given that knocked out an expiration in the middle of this week.
Okay. So tell me how that affects it, the expiry. Are we seeing bigger volumes around that or what?
So given that tomorrow's expiration is now being cut short, when you think about it, anybody that had positions in options for Thursday's expiration in any of the indexes, well, Thursday's not really going to trade anymore. So that's now something that is kind of a wrench in some people's books potentially. I don't think it's enough to necessarily drive a ton of movement, but at the same time, what you might be seeing now is a combined hedging of both today's expiration and what would have been tomorrow's expiration here all at once at the end of today, if that makes sense.
Okay. The big positioning, is it skewing negative? Tell me why you sound a little bit ominous in your tone out of the gate there.
So with the rest of this week, today, it's pretty hollow with where we're at. Between 5,900 to 5,950 is likely the range for the rest of the week. However, if this 5,900 level gives today or Friday, this 5870, 5875 seems almost like a hit to the downside there if that level breaks and holds. Whereas, if it can stay the course, kind of keep running flat, the term some people love, never short a dull market. If nobody else comes in with much selling pressure, it's very possible we can flow back up to 59.50, and that's the bull's ideal close for the week. Get back up to 59.40 to 59.50, and then go into next week's expiration, which is a pretty big one. January 17th is essentially monthly option expiration, and it is accounting for about I believe 20% of the open interest right now in SPX roughly. So looking further out there, we're seeing 5,900, 5,950, 6,000 seems to have a solid balance of volume and appetite, we should say. This is gamma for this Friday that we just saw there. But volume we're seeing today and the monthly contracts for January, there's a lot of put activity going on at 58.75.
Okay.
Depending on how that goes, if that's enough to draw this thing below 5,900, that's where we could see, okay, 58.75 starts to stick. Now all of a sudden 58.50 is a little bit closer. And the reason why I'm so uneasy on this is because I'm not seeing as much activity to the upside, or in the calls, I should say, as I'd like to see. And simultaneously, there's that gap from the election, right? Down near 5,800. And I think that that's been something most people have pretty much forgotten about since that happened. So where I think there's a lot of attention should be focused on is 5,800 essentially fills that gap. 5,700 is then the sort of base below that we established prior to the election. So if for some reason we continue to, drift lower and that gap becomes more and more likely to fill, you're really going to want to keep an eye out on the 5,700, 5,800 expirations in the coming, weeks and monthly expirations going into February and March. if we seep lower. It's very possible if those levels give, we've turned across a big level. Not great for bulls.
Yeah, it doesn't seem like, other than that election gap, there's a lot of strong positioning to create covering from shorts. Whereas to the upside with the 5,900 where we're at right now, that yellow line in the middle, sticking with the Friday gamma levels, there's a good bit up there that could draw us higher. But there's also pretty clear levels at which we think about those bars as kind of being guardrails, resistance in some way, as the market kind of calibrates around that point. And, whereas to the downside, it looks like kind of more free roam. If we take another real stab and puncture, there could be some ferocity to the downside move.
Right. And if we were to say, we get this upside movement that we're looking for, if we're bullish, right? I wouldn't expect it to be a slow, steady grind over the next 2 days. Like, this thing looks like it's ready to move, straight through back up to 59.50 for Friday, and potentially even explore, 75. So, if you're going to get the upward movement, I think it's not going to be a small amount. I think it's going to move from about 5,900, 5,910 where we're at to about 5,950.
All right, so it sounds like get ready for movement. Seems like as the big positions are a decent ways away. Hey, real quick, Shane, looking at today's volumes, you've got a chart also for the SPX for this afternoon for the next 20 minutes. Tell me real quick, we got about 40 seconds. Oh, hey, Shane, we got you. Make sure you're not on mute. Maybe we are.
Sorry about
there
that.
You go.
Not
no,
sure
you're
what
good.
happened. Looking at where we're trading at right now, 59.09. Fairly hollow right in here, right? It looks like. Oh, actually, I believe this is a chart for the monthly expiration, but for today, if 5,900 gives, 58.80, very likely 58.75 potentially could touch again on the day. If it can break above 59.10, we might get some leakage to the upside towards 25.30. So, I wouldn't put out a potential 10, 15 point movement here in the next 20 minutes, depending on what happens here into the close.
All right. Thanks, 59.08 right now. I guess an okay place to get stuck for the day, but kind of a scary bit of a cliff we're looking over as far as positioning goes below 5,900, with the exception of a few little spots there you mentioned in the mid 58s. Thanks, Shane.